Hi, thanks for tuning in. This is the US Futures Weekly Chart Analysis for the week ending 5th of July 2024. First chart is the US Dollar Index Futures, which closed lower this week. There was no attempt to push higher in response to the previous two bars, which opens the door to the trading being a potential failed test for supply. Price still remains within this bar's range and above the important 104 level, so you could give it the benefit of the doubt. A failed test would be considered a sign of weakness in itself, and you've certainly got the lows of the range coming through here. That's the stronger lows. This is the actual lows here. A clear break and close below that level would be a sign of weakness and a breakdown bar. But at this point, price still remains within the range of this bar and within the previous up range here. So we would give it the benefit of the doubt at this point in time and say that it's uncertain. Now, the down bar this week has given some breathing space to many of the associated markets who were up in response. And the amount of ease of movement shown in those associated markets gives us some idea of the underlying strength or weakness in those markets. This market did have 5 full days trading this week, and volume was below average. All the associated markets had 3.5 days trading. There was a half-day trading or an early close on Wednesday the 3rd, and the 4th of July was a holiday. So keeping an eye on the volumes, we may even look inside some of the bars that are a bit unclear to see if we can work out exactly what was going on. Next chart's the E-mini S&P. This is S&P 500 index futures. You can see the market's pushed higher this week. Little gap up here, which is a bit unfortunate that it wasn't closed. Volume was below average, but it's 3.5 days. In fact, perhaps we'll look inside this one. This is the daily chart. The 4 days trading is this week's trading, beginning here, which was a little attempt to test by the look, but it's an up bar, which isn't a test bar, and volume was reasonably high. So you'd look at that as a supply bar initially, as supply coming in, and there was supply coming in, but the next bar tells you what's going on. You've got a little down bar here, which is a test for supply, and a push higher to close as an up bar, and still pretty good volume. So that's telling you that this previous bar was likely an absorption bar and that the buyers held the upper hand. The market tested for supply in response and then pushed higher in the second half of the day. And that was then confirmed by another up bar in response. This was the half day's trading, so volume was understandably lower. And then the market pushed higher. And many people took a holiday on the Friday and made it a long weekend. So the trading was muted on the Friday, but you can still see the market closed higher. Volume was okay for a half holiday, you might say. Many of the traders were taking a holiday, and prices closed up in response. So what we got was an absorption bar where the buyers held the upper hand, a test for supply in the first half of the trading day, and then a push higher in response, a modest push higher on a half-day holiday, and a confirmation push higher towards the end of the week. So there's no danger that can be seen in that, and we'll see what happens then on Monday. Move to the weekly chart. That all makes a bit more sense now. Perhaps the only disappointment, for me at least, is leaving this little gap here behind, which was perhaps a little unfortunate. Maybe it'll be closed at some other point in the future. But at this stage, despite the low volume, this market did push higher. It closed above the previous bar's high, which is always a positive, and it looks pretty safe and sound at this stage. There's no obvious weakness there. 10-year note futures, and they closed back up near the highs. Here's the old breakdown line. Here's the one above it. price pushed below this bar's low and perhaps tested for supply. It's a bit wider in spread than you might like for a test for supply, but the job was done and price pushed back up in response, probably partly due to the weakness in the US dollar as well, but it's now up right at this breakdown line in the past. It's actually a complex level, so there may be some more supply just above that the market needs to contend with. However, at this point, any further weakness in the US dollar will likely see this market attempt to break out in response. If the US dollar starts to recover, I expect a test for supply like this, something like that bar, perhaps with narrower spread. Copper price futures. Copper price futures recovered nicely this week. There was an attempt back here to stabilise the market. There was a weekly push lower here on reduced volume, so there wasn't any serious selling pressure in that market, and it wasn't a breakdown bar. The breakdown bar would normally close near its lows with an increased spread and increased volume, and that bar didn't do so. So it wasn't really a true breakdown bar. There's been a reversal this week, possibly a little bit of over-enthusiasm in the market because it's closed well above the previous bar's high and above the highs of this little mini range and above this bar's high. So you would almost certainly see some testing for supply and consolidation in response, at least early in the week. But the market perhaps has seen a little bit of over-enthusiasm in the trading later in the week this week. Gold price futures. Gold price futures also moved higher this week. Here's the lows of the range down here, highs of the range through there. There's where the market had been constricted, and prices pushed above that this week quite nicely on a modest increase in volume despite the 3-day week. Perhaps we'll look inside this bar. 4 days trading begins here. It's a lovely little test for supply. There was an attempt to push higher in response, and the market had some further supply that it needed to absorb. It came back and did so. The market then pushed higher in response on an increase in volume, and that was the shortened trading day. So there was quite a bit of enthusiasm in there. And then to confirm that, on Friday, the market continued higher, probably with the weakness in the US dollar helping to give some tailwinds as well. So that's a pretty comfortable push higher. All makes good sense. Back to the weekly chart. You can easily see lows of the range come through here, highs of the range through there. The market's moved up. This is easier in here because trading's already taken place. It'll be more difficult to break out in response, although there is no serious trading up here. So it shouldn't be too bad. But the market's moved up to the highs of the range near the 2400 level. You would normally expect some consolidation up near the highs of the range to absorb any supply that may be right at this level before there's any serious attempt to break out. So if the US dollar attempts to recover, you'll certainly get some testing for supply and consolidation in response. If there's continued weakness in the US dollar, you'll probably see this market only briefly attempt to consolidate and then make a more serious attempt to break out. Silver price futures. Silver price futures moved higher with real vigour this week. It's always a little bit more volatile than the gold market. There's the highs of the range. It's done almost exactly what gold's done. It's pushed up towards the highs of the range without threatening to break out. You'll almost certainly see some testing for supply early, especially if the US dollar attempts to recover. And then there'll be a push higher in response if the US dollar continues lower, or the consolidation and testing for supply will continue just sideways while the US dollar shows how much strength it's really got. Light crude price futures, they've showed considerable strength this week, possibly more than you'd expect. Here's the breakdown line in the background. Here's the stronger breakdown line from quite a while ago, and they line up almost perfectly. The market pushed up to that level 3 weeks ago. There was a consolidation bar here. Now that would normally be a test for supply, but the market closed as an up bar, and there's almost no trading below the previous bar's close. Now you've seen the response, which is to push higher. That suggests the market was so strong here, it was unable to produce a proper down bar to consolidate like this. So the market's actually consolidated as a narrow spread up bar and then pushed higher again in response. This is a significant bar that the market has pushed up above this level and has done so with 3 weeks trading supporting it effectively in here. It's not just a flash in the pan single up bar which is going to fail. It's taken 3 weeks to push through there. The market has closed a little off its high, but comfortably above this breakdown line, and you may see some testing of it yet, but this is looking like the market is really making a serious attempt to recover back above this breakdown line here, and start a new level. So we'll just see how successful that is, because the market has been restricted at the 81 level for quite some time. And it does look like the market is making a pretty serious attempt to push above that level and begin a new range. So we'll just see how successful that is. It will, of course, also depend on the US dollar, but it's certainly looking stronger than weaker at the moment. Euro, US dollar currency futures. This market's pushed higher this week. Highs of the range probably come through there. Lows of the current range through here. This was a 3-day week, so it was probably increased volume. Perhaps we'll have a look inside this bar. It's the 4 days. Here you've had an up bar, which will be an absorption bar really, because you can see the next bar tested for supply below the previous bar's close, closes an up bar, a further up bar in response. The market's then pushed above this minor level. The highs of the range above are up here. The lows of the range through there. So the market's actually starting to push into where the trading range of the previous range was. It's only an attempt to recover at the moment. And I expect if there's any strength in the US dollar, it'll put this market under some pressure. Whether it can maintain above the lows of the range will probably be instructive in the end. But at this point, the market's attempting to break into the previous trading range above. And you can see that on this chart here. Here's the previous trading range above. The price is just pushing into it. British pound currency futures. The highs of the range were through here. Prices recovered nicely this week. You've got a new level through here, which likely corresponds with this stronger level through there. And prices pushed up above the previous highs of the range pretty comfortably, where the market was attempting to consolidate in here and absorb supply. So there was likely to be reduced supply through there, which allowed this market to push up with increased spread. Now we have to wait and see if the market is strong enough to maintain a position above this line and perhaps set itself up for a challenge to this line, which would be significant if the market was strong enough to do so. It would take some weakness in the US dollar to do that at the same time. Japanese yen currency futures have attempted to hold on this week. Here was the important lows of the range. Here was the last gasp lows. The market threatened to break down last week. This week, price did push below the previous bar's low, but recovered and it's actually closed as a very slight up bar by the looks. Perhaps we'll look inside this bar. Here's the daily chart. The last 4 days, you can see the market really has seen some support come in, really. Here was the previous attempt to support the market. Price broke down after 4 days. There was an immediate attempt to consolidate again. You've had effectively 4 days where the market has seen buying support emerge. You've had a down bar here on below average volume. It has broken below the previous attempt to support the market, the previous lows. The next bar saw some consolidation take place. This was a more serious push lower, but it's still closed at this level, and then an up bar in response. There is an attempt to support the market here. Whether it's going to be successful or not is certainly questionable, but the market didn't just break down again. I guess these attempts are going to be a continual thing until one becomes successful, because we've seen a few at the time recently, but this is the important level market needs to get back above, and this is the last gasp lows. It certainly hasn't been a clear breakdown this week. There's been an attempt to recover. We'll see whether that's going to be successful or not in the future trading. Aussie dollar currency futures, with the weakness in the US dollar, also saw this market push above the highs of its range. It's only an attempt to break out at this point. It's not a clear breakout, but even so, it's closed clearly above the highs of the range, which have been respected for quite some time. Any further weakness in the US dollar will see this market continue higher. If the US dollar attempts to recover next week, you'll likely see some testing for supply, and whether the market can remain above this 67 level will be the important thing to keep an eye on. Bitcoin futures. Bitcoin futures threatened to break down this week. Here's the lows of the range coming through here. The market's clearly pushed below that level with an increased spread. Now, a breakdown bar generally doesn't close well off its low, so that's an inconsistency with a true breakdown. And volume was below average, although that only represents 3.5 trading days, with the holiday last week and the shortened trading day on the Wednesday. So if we look inside that bar to gain a better view, here's the daily chart. You can see the 4 days trading beginning here was last week's trading, with the third day only being a half day. Prices gapped up, which wasn't really supported by the market. There was an attempt to consolidate, which is the low volume as price moved back. So this was an attempt to push higher. Supply has been drawn out here. This was the shortened trading day. Price has moved clearly below that level in response, but closed well off its low on the Friday. Volume, however, was above average, and that suggests there is an attempt to support the market off its lows. So if we go back to the weekly chart now, which makes more sense now you've seen what happened inside that bar. Here's the lows of the range. Next level comes through there. Markets come back and tag that level nicely. There should be some modest support within this zone here. The market's come down, just touched the top of it, and seen some buying support emerge at that level there. That leaves some chance of a reversal next week. Doesn't mean there will be, but there's some chance. It wasn't a fully supported breakdown bar last week. Any further downside in response would confirm this as a breakdown bar, especially if the market closes below the previous bar's lows and it's a clear breakdown. So the response next week is important. A reversal like this in blue would likely see the market come back up and attempt to test the highs of the range. A further down bar in response would likely see the market attempt to consolidate and recover around the 50,000 level or just on top of it. So pretty important response next week, but buying support did emerge off the lows this week. Just how strong they are and how strong the supply is that's been drawn out. It's going to be a bit of a battle between buyers and sellers. We'll see which one gains the upper hand, probably sometime this week. Back to the US dollar index just quickly to finish up. You can see that the market has pulled back this week. Price does remain within the range of this bar here. So although it's a down bar and there may be a failed test in here, it isn't a failed test as yet. It's threatening, but it's not yet. The important level is the 104 level, no doubt. So if price continues below that and there's a clear break and close below 104, that would be significant. We'd likely see the market come back and test this level and probably down here. But clear break and close below 104 would be significant, there's no doubt. At this point, the market has pulled back. There could easily just be a reversal here, and this was just like a 2-bar reversal. So all is not lost if you're looking for the US dollar to move higher, but it's looking a little more vulnerable than it did previously when there was 2 test for supply bars, a test and a secondary test, which looked like the market was just going to move higher in response, and it hasn't done so this week. It's pulled back with an increased spread and increased volume even on a shortened trading week. So it's going to be an interesting response for sure, and its response will play a big part in the price movements or the ease of movement in many of these associated markets. Okay, thanks for your time. Big week coming up. Thanks again. See ya.